Avni, now the market have been on a tear in the last three sessions. We have seen a rally of about 400 points in Nifty. The index also closed above its 20-day moving average on Monday, placed at somewhere around 19,411 sort of marks. Time for some consolidation now?
Ideally, that would be very healthy if market consolidates a bit, if it cools off a bit. So whenever, see, last week when we spoke, it was a sell on rise scenario, and twice it came down from the highs of 19,250 all the way to 18,900. And similarly on Bank Nifty also, right from 43,350 to 400 levels down to 42,800. But now the scenario has changed. Friday, Nifty closed above the 19,250 mark. And since then, yesterday also the uptrend continued. So I think some consolidation should help make the uptrend stronger. So I think around this retracement could find support around the 19,270 to 19,300 mark. 19,300 put is where we saw a lot of open interest built up, a lot of writing positions built up for the coming weekly expiry. So I don't think it's a very negative market. Yes, some bit of consolidation will only help to make the uptrend stronger.
Avni, we have also been talking about Nifty Bank and how it has underperformed the broader markets in general. I mean, yesterday turned net positive for the very first time, for at least for 2023. It was up about 1%. Has seen a good bit of movement in the last last three sessions at least. It has rallied by about 900 points. Will this rally continue, and can it take markets higher to perhaps new all-time highs in the next couple of months?
So Suyash, my view is that in case if Nifty has to cross that congestion zone of 19,850, from where we have seen a correction of around 1,000 points, nearly 1,000 points twice, if that level has to be taken out on Nifty, it has to be Bank Nifty which should lead the entire rally. Until and unless Bank Nifty participates in this rally, we will not be seeing any new all-time highs in any time soon. So my view is that for Bank Nifty, 43,600 is where the major resistance is, which Bank Nifty closed yesterday above that mark. And I think slowly and gradually it should move towards 44,000. Now, one more interesting data point is that if you consider the FII participation individually in each of the index, FIIs were continuously selling Bank Nifty futures. But only in last 2 days, they have turned buyers in Bank Nifty futures. So I'm talking about specific participation in Bank Nifty futures. So they've turned positive. They've been selling puts. So that's a very positive sign. Some retracement should help again for Bank Nifty trend also to get stronger. Slowly and gradually, we are heading towards 44,000.
Now, Avni, we are drawing curtains on the Q2 earnings season for India Inc. Nykaa reported its results today. Healthy set of numbers. Profit was up around 50% on a year-on-year basis. Revenue jumped by 22%. And I mean, the stock has been on a tear. Yesterday, it ended about 5% higher. Today, it's also up about, I think in the morning, it opened around 3.6, 3.7% higher. Currently, it's up about 2% or so. And it has been on a tear, as I said, since its Q2 business update. What's your overall outlook on Nykaa? Is there more legs to this rally?
So Nykaa, if you see the weekly charts, then there's a very, very strong resistance at around 155 level. And that is where most of the times the selling pressure emerges. So I think today also it did make a high of 154.8 and it is seeing some profit booking. So until and unless that level is crossed, I think it should trade in a consolidation range of 140 on the downside and 155 on the upside. Once we see a breakout, a close above 155, the stock will rally up to 180 in a very short time.
Now, Avni, another company that came out with its Q2 results was Divis Labs. Divis missed the street's expectations. However, the management outlook on growth, growth opportunities and commentary on custom synthesis business and demand outlook in general was perceived as a big positive, and as a result, we saw a good bit of movement. In fact, the stock ended as a top gainer among Nifty stocks yesterday, but it has been an underperformer. I think the returns for year-to-date returns, it has given to the tunes of about 3.5%, whereas Nifty Pharma has rallied by about 10% or so. What's your outlook on Divis Labs?
So Divis again, technically and options data, will look at both these pictures. Now, technically, last week it has given a bullish engulfing pattern on the weekly charts. So that's a positive sign. It is moving above the previous week's high, and that's a very good sign. Now, looking at the options built up, the highest open interest in calls is placed at 3,500 call and 3,600 call. Now, only a bit of worry is yesterday, although Divis Lab moved above 3,500, there was no unwinding of 3,500 calls, which means that the call writers at 3,500 are still hoping for Divis Lab not to go above 3,500. So I think for the current series, for the November series, we should be seeing the stock consolidate between 3,400 to 3,550, around 3,550 level. And technically 3,560 is the level above which once it closes above that level, we should be seeing the stock head towards around 3,800. So I think 3,560 is a very crucial level. It has to cross and sustain above that level for any up move to continue.
Hi Avani, Amit here. Before we let you go, could you give us your top 5 picks for the day?
Hi Amit, sure, yes. The markets are looking pretty good, and these are some of the stocks which are all frontline stocks. We are sticking to the mainline stocks and avoiding the mid cap stocks. So my first pick is ONGC. Today, and opening trades itself, it has rallied up to around 195, but it has given a breakout above 192. It's a good trade if you get it at around 192 to 193 level. It's a good trade to enter, and you can keep a stop loss of 188. I think we should be seeing the stock head towards around 208 to 215 in a very short time. The second one is Bharat Electronics. That again around 136 to 137 level is a good entry level. 147 would be the target for the stock, and 132 is the stop loss. So again, here risk reward is pretty good. And of course, the leader is L&T. L&T post results, it has seen some profit booking, some retracement back to the breakout levels, but it is ready to move up again. Around 2975 is the level where one can enter for a target of 3,100 and keeping a stop loss of 2,920. Now, one dark horse could be Tata Steel. So Tata Steel is making an attempt to break above 120. So this is, we are preempting the breakout. It's trading around 118 to 119. I think it should break out above 120 to 121 congestion zone in a very short time. We have seen some unwinding happening at 120 call yesterday. So I'm targeting, it's a small trading bet. We are targeting 128 on the upside, keeping a stop loss of 113.5. And one from the defensive sector, which is Glenmark. Now, Glenmark has been, if you look at the daily and weekly charts, it's a fantastic consolidation that we have seen, and the stock is not breaking the support levels. So again, this is in anticipation. Once this consolidation ends and it moves above the breakout zone, above this congestion zone, we should be seeing the stock heading towards 815 levels. Currently, one can buy in the range of 755 to 756, keeping a stop loss of 730.
All right, that's the top picks from Avni. A lot of large cap picks there, Avni, L&T, Tata Steel, ONGC. Perhaps the focus now will be more on, on the large caps than mid caps, would you say?
Of course, when markets get a little jittery, they are approaching the resistance zones. Again, we may see some kind of selling. So in this kind of volatility, mid caps are the first ones to get beaten down. So we'll stick to the large cap companies. Our view is positive on large caps.
All right. Thank you, Avni. Thank you for joining us here on First Take. Always pleasure talking to you, ma'am.
Thank you.